Welcome to the January Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, 2012 is in the history books. How did we end up, and how are we positioned for 2013?
2012 was actually a pretty good year. Financial markets did very well. The S&P, the international markets were all up. Risk was reduced across the board. Economies did better than many expected. If you look at Europe, for example, they've made real progress on their political problems. They are starting to make progress on their economic issues. It's a much safer continent at the end of the year than it was at the start. If you look at China, they successfully negotiated their leadership transition. They seem to have engineered a soft landing in their economy. Again, much better leaving the year than going in. The U.S. left the year in much stronger economic condition than it started. The housing recovery has really started to gear. Employment is coming back. Again, a tremendous amount of good news. The financial markets reflect that, but we are, from a fundamental perspective, well positioned going into 2013.
2012 did end without resolution to the fiscal cliff, although Congress passed a compromise bill on New Year's Day. Now that a bill has passed, do we have smooth sailing ahead?
I wish I could be more positive about that, because unfortunately the bill that was passed does not in fact resolve the fiscal cliff issues. The general consensus was we needed about $4 trillion in deficit reduction over the next decade. This gave us about $600 billion. That's about 15%. That's not even a down payment. So going forward, we have a couple of issues. We have the sequester, the spending cuts part of the fiscal cliff that wasn't resolved. It was just put off for 2 months, at which time we will also be facing the debt ceiling negotiations. And we'll be doing both of these in a Congress that's more partisan than the one that we just had. The consequence will be the cliff will be bigger, the consequences will be worse if we go off of it, and we will have a Congress that is less able to deal with it. We haven't solved the fiscal cliff. We've just postponed it, and we've made it bigger.
Equity markets responded favorably to the compromise bill, although, as you note, a number of issues still need to be resolved. How do you expect the markets to react once the initial relief has faded?
Well, I think there are some good things to this deal. First of all, it will help preserve consumer spending power. By keeping lower tax rates, that will enable consumers to keep spending. They'll have the disposable income. That's going to be a significant positive going forward. That's a really good thing. Second of all, it does provide some certainty, which will help motivate more investment. So in the short term, this bill does indeed have positive features, and I think the market is appropriately reacting to that. I think the problem, though, will come when the market looks at the fact that most of the uncertainty has not in fact been removed, the fact that the spending cuts are still out there, and the fact that if you look at the overall deficit reduction picture, the tax part of the problem has actually been made worse by making the tax rates permanent. Again, the uncertainty has gone away a little bit. So when the market starts to reflect the fact that the uncertainty is not completely gone away, and in fact in some respects has gotten worse, I don't know that you're necessarily going to continue to see this kind of euphoria.
Well, the expectation seems to be that economic growth will slow a little bit in the first part of the year, although we won't go into a recession. What do you think about that?
Well, as I said, the fundamentals are actually very strong. Housing is gearing, employment is coming back. The big drawback to this point has been business uncertainty with respect to the fiscal cliff. Despite the deal, that uncertainty has largely not gone away, as I said. So what will really take us to the next level of the recovery is still pending the next negotiations. If that goes well, then we could have a very, very good year. If that doesn't go well, maybe not.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.